Welcome to episode 18 of Financial Blogmas. Oh boy, we're almost done. This is fantastic. This is fantastic. So, this time we're coming from another room in the house. We're not at the Christmas tree. We're not at the Parliament buildings. We're not in the office. We're in the Star Room. The Star Room, which is also a bedroom. But hey, why not? I just thought it would look kind of interesting for this topic. So today, guys, we're going to be looking at Santa's large cap naughty list. So what the banana bread am I talking about? So basically, we're looking at those large cap companies. So for large cap, we're talking basically $10 billion market cap and above. The big companies, those are the ones we're going to be looking at today, and not the ones that are doing well. We're going to look at the ones that are in that top 10 worst performers of the last year. And I know without a doubt, you guys can probably guess a whole bunch of them. So that's not too shabby. I do see Ian in the house. Hello, Ian. Let's see, because it's supposed to snow bad later today. Yeah, it's actually right now a little bit of flurry starting here. Chaka cut off. Uh-oh. Yeah, hopefully we don't have too many issues with the chat. Hopefully not. All right. So as I said, I've got the 10 worst large cap performers of the year on the TSX, of course, so the Canadian companies. And yeah, there's a lot of companies I recognize. A lot of companies I've been answering questions on for most of the year. So let's get to number 10. We'll start with number 10. So number 10, we got Saputo Inc. Incorporated. So they are a global dairy processor. Their ticker is SAP. Now, in the last year, this is not bad for number 10. They're only down 2%. So their share price has only dropped 2%. So it shows for the most part. And keep in mind, we are in a bull market. So even a minus 2%. So being down 2%, that's still kind of bad in a bull market. Still kind of bad. They've had a lot of competition this year in the dairy market. That has certainly driven the reason that they're down. As well, they've been cited as having quite a few operational inefficiency. So poor Saputo is not doing so well. And I'm pretty sure I'm probably crucifying the pronunciation of Saputo, but hey, that's just the way I roll. If there's a way to mispronounce a word, I'm going to find it. I guarantee it. So they're down 2%. SAP coming in at number 10. That's our dairy producer. Keep in mind, if this thing were to, all of these tariffs from the United States, if they were to come through, that 25%, boy, this would be a company that would be hurt badly. So yeah, number 10. Number 9. Now, before we get to number 9, let's see. Ian is saying my old bedroom at the farm has a roof like that. Nice. And Kenneth says, has TELUS made it to the large cap naughty list? I can say there's a good possibility. I will say that. I'm not going to reveal where they fall on the list, but there's a good possibility that we're going to see TELUS. But before we do, we've got to see our number 9 large cap stock. And holy banana bread, it is... before we go to number 9, I didn't tell you guys. SAP, by the way, they have a dividend yield of 2.971%. So we're going to look at some of these dividend yields because they're kind of inflated, right? As the company value goes down, the yields start going up. So I will tell you right now, there's one company on this list that has a yield that almost looks like they're a covered call ETF. But we'll keep going. We're definitely going to keep going. All right, number 9. This one, absolutely. I'm actually surprised. I'm surprised they're only at number 9. But TD Bank. TD Bank, of course, we know they've had a crappy year with all of those money laundering charges and some of the record fines in the United States. Pretty much their whole expansion into the US is pretty much on hold. So they've had a absolutely horrible year, but believe it or not, they're only down. They're only down 5% on the last year. Their dividend, it's up there, 5.425% on that dividend yield. So TD coming in at number 9. Maybe they should have been higher, but they weren't. They weren't. There were other large cap companies that did much worse, for sure. Let's see. Jackie says, great field trip to the Parliament buildings yesterday. Thank you. Thank you. I would have loved, and this is that thing. I guess because it was winter, I really didn't have a lot of options. But if I do it again, I'd want to do it in like the summer or something where I have a lot more options. Maybe find a place where the connection is working better. Like downtown Ottawa, you would expect the Rogers connection to be good. But no, it was not the best connection yesterday. Larry says another hard day went long on NVDX 2X NVIDIA ETF yesterday, up 7.7%. So we're done. Yeah, I wouldn't blame you. NVIDIA has had a pretty rough couple of days. Speaking of, well, not really speaking of NVIDIA, but we also have the rate cut announcement this afternoon from good old Papa Powell, and everybody and their dog's expecting a 25 basis points cut. I think that's going to happen, but I do think after this one, you're probably not going to see another one for a few months at the least. So, because the U.S. economy, it's chugging along really, really well. It's chugging along a lot better than our number 8 company. Our number 8 company, Nutrium. So NTR, they are down a whopping 6% on the year. A lot of the reason that they're down, though, is basically there's been a decline. Yeah. No, there's been a decline in global fertilizer prices. That has really hurt them this year. These are still, and keep in mind, guys, just because you made this list, it doesn't mean you're a bad company. These are good companies. These are companies that will recover. Out of the 3 so far, I think TD will recover. I think Nutrien will cover. Probably Saputo, but Saputo doesn't have as much. I don't have as much confidence for them as I do for the other 2. All right, number 7. Number 7 is actually one of my favorite companies. Oh, before we get there, Nutrien, by the way, has a dividend yield of 4.54%. So their dividend yield's up a little bit. Number 7 is one of my favorite stocks. I love this company a lot. You know, they have quite the track record, in my opinion, and that is Canadian National Railway. So CNR down 7% on the year, mind you. They'll bounce back. I think they'll be bounced back pretty quickly. Their yield is currently up to 2.293%. Some of the issues that CNR have been facing, of course, is, well, they did lose a lot of revenue because of, even though it was a short strike, it certainly was enough to cause a lot of issues for them. They are still kind of suffering a little bit from it, but I'm expecting a much better year in 2025 for CNR. All right, Kenneth, your moment is here. It is your time. Number 6, we got TELUS. TELUS is down 10%. That's pretty big. Oh no, I did. I told you guys the yield on CNR, didn't I? Maybe I didn't. 2.293% dividend yield CNR. Okay, TELUS at number 6. They're having a rough year. Basically, they've got 2 things that are contributing to their being down. Well, technically 3. 1, they've had a lot slower subscriber growth than anticipated, so subscribers are down. The number 2 thing is, right now they are putting a lot of expense, so they're paying out a lot of money in developing their 5G network. So you've got slower revenue coming in. You got a whole bunch of revenue going out in setting up 5G. That's not helping. And in addition to that, and this is kind of that third one, the whole communication sector has suffered big time in the last year. So, that's kind of the perfect storm. Expect to see at least one, if not both, of the other telecommunication companies in this list. Oh boy. All right. We're about to hit the top 5. This is pretty cool. Pretty cool. Let's see here. Kenneth says, yes, number 6, below $20 today. I know. Number 5, Magna International. Magna International. This is, those of you who are not familiar with MG, they are an automotive supply company. And oh boy, they have had a lot of issues on their production. There's been quite a slowdown. They've also been running into chip shortages. So that has been hurting their bottom line this year. So they're down 15% on the, in the last year. Their dividend, though, looking good, 4.249%. Oh, by the way, the TELUS dividend was 8.002%. So, yeah, that's not a bad dividend. Not a bad dividend at all. I mean, TELUS will definitely rebound, and so will Magna International. All right, this gets us to our top 4 and our second appearance by a Canadian telecommunication company. At number 4, we have Rogers. Good old Rogers. They are down 17% on the year. And, well, actually, in the last year. I just did it the whole year, just a little bit easier. They have a dividend yield right now, 4.124%. Now, Rogers, their biggest issue is they bought Shaw Communications, and then the aggressive rate hikes. Just before the aggressive rate hikes, they pretty much screwed themselves. That has hurt them. It has piled on so much debt. They've been struggling all year as a result, so there's not much you can say. Rogers is under the big pile of debt, and it's going to take them a while to get this all sorted out. So, yeah, Rogers coming in at number 4 with a minus 17%. Sorry, coming in at number 4. Number 3. Number 3, folks, we have, and this one hurts, we have Canadian Tire. I love Canadian Tire. They're down 20% on the last year. They have had 2 big issues. One, people are just not spending as much anymore. That has hurt their bottom line big time. And they're also finding that customers, instead of coming into Canadian Tire, are using things like Amazon. So e-commerce is definitely hurting their bottom line too. Now, their dividend yield, that comes in at 3.373%. By the way, the Rogers one, 4.124%. So, now we get to our top 2. Oh boy. Oh boy, we got some, we got 2 more. All right, number 2 is Open Text. I got out of them when they were at their high. I had a feeling that things weren't going to go right, and I'm glad I did. They have fallen. They're actually negative 23% on the last year. Their dividend yield, by the way, up a bit, 3.564%. They have had 2 big issues for Open Text. One, their research and development costs have gone up. So they're paying a lot more for research and development. And then once they do research and develop that new software, people are being a lot slower to adopt it. So slower adoption on their new software has hurt their bottom line big time. That's why they're sitting at a negative 23. All right. The number 1. Before we get to the number 1, let's recap. Let's recap where we've been. So number 10, SAP down 2%. Number 9, Toronto Dominion Bank down 5%. At 8, Nutrien down 6%. 7, CNR down 7%. 6 is TELUS down 10%. 5, Magna International down 15%. 4, Rogers down 17%. Number 3, Canadian Tire down 20%. And number 2, Open Text down 23%. All right, the number 1, worst company. And yeah, Meowie, you are 100% right. Bell Canada has absolutely dropped this year. They're down 29%. Um, Believe it or not, there's a couple of things going on with Bell. One, Bell has held and has owned a lot of the old school traditional media. So radio stations, newspapers, all of that fun stuff. That revenue is down big time, and that is hurting them a lot. In addition to that, they also have a really high debt load. So between the two of them, Bell has been strangled this year, and they're going to have a very, very big lump of coal in their stocking. So what can I say? What can I say? Bell. Bell will, of course, recover, but, you know, it's going to take time. Now, I mentioned that massive dividend. Yeah, it's Bell. 11.808%. Holy banana bread. To see something that high, you almost need a covered call. So Bell is behaving like a covered call ETF. Well, a quarterly one, but how much further can Bell fall? I mean, just the last few days, Bell has been trickling down even more. As you know, right now there's a lot of chaos in the Canadian government, of course. That's not helping us. It's bad. It's bad. But here's the thing. I'm still dollar cost averaging into Bell. They will rebound on the other side of this. I have no doubt of that. My big doubt is when is the other side? So I think that will be the big thing. Vic says, TELUS on sale. Yeah. Any of the companies on this list are on sale. They're absolutely on sale. And Vic now says, first from Parliament, now space. Yeah. It's kind of funny. I actually thought about doing this in the dark, but problem is that I don't know how well my face would light up in the dark. Probably not very well. So the lighting would have been a big issue, but yeah, this is just, I wanted something a little different today. Jackie says, just bought a bunch of Bell yesterday, hoping for good things ahead. Yeah, if you are dollar cost averaging into Bell right now, you have to, not only do you have to buy, but you also have to put a little bit of patience in with that as well, because, you know, I think this one's going to be a slow burn getting us back up. Now, these rate cuts are going to be great for, you know, for Bell, Rogers, and TELUS, but it's a little bit of a delayed thing. We just had a 50 basis point. You probably won't see the effects of that until the new year. So hopefully they can start moving in that right direction. It'll be interesting to see what 2025 holds for sure. But guys, you know, I'll be here all the way through that. So no worries. I think we're going to have a lot of fun. We are going to be back here again, by the way. We got a market close this afternoon, so 3:45 Eastern time, basically 15 minutes before the market closes. We'll be here. We'll have some fun, and we'll talk a bit more about the current market, and not so much one of these 2024 lists, but you know, and we'll be back again. We'll do this here again tomorrow. I don't know if we're going to do it. Maybe we'll do it from the same room. Maybe we'll do it from the Christmas tree. I don't know. We'll figure that out. All right, guys, this has been fantastic. I will see you guys. Gosh, right now it's like a few hours. So yeah, we're going to see you in a few hours. Kenneth says selling ahead of the rate cut. Yeah, there's going to be probably, I will be shocked if it's not a 25 basis point rate cut on the Fed here. I believe they'll announce that around 2 p.m. Eastern. So yeah, we'll definitely talk about that on the market close. Jackie says, see you soon. Ian says, need another deep dive on BCE. Why is it dropping so bad? Absolutely. Yeah, we probably do. Soon. We'll have one soon. I can't tell you when, but we will. I think everybody wants that, and that would be a popular video. So probably early in the new year. Let's see. Rory says, how's the size of that cockroach on the back wall? I know. I've been feeding it radiation, right? You know, I don't know. Anyway, guys, until later this afternoon, I will see you guys later. Have a great afternoon. See you guys soon.